So the Fed says the economy is too weak to taper. We have Jim Wyckoff after the FOMC. Joining me this Wednesday afternoon is Jim Wyckoff. Jim, thanks for being with us.
Hello, Daniela. Always nice to be with you.
So no real changes here to monetary policy, Jim. No real surprises. What are your thoughts with the conclusion of the FOMC?
Daniela, indeed, there were no major changes to U.S. monetary policy. The $85 billion a month bond buying program will continue. The one thing that the raw commodity sector saw in the statement that was just a bit bearish was the fact that the FOMC said U.S. economic growth, the headwinds may not be as stiff as a few months ago. That could be extrapolated that the tapering of monthly bond purchases could come just a bit sooner than what the marketplace had reckoned before the FOMC report. But my take is that that's not a real strong suit, not a real strong case that anyone would have that would be the case.
Jim, since the Fed has made it clear that tapering is not in the cards, is inflation not a threat here?
Yes, indeed, Danielle. I'm glad you brought that up. It's a good point. I think that at some point down the road, inflationary problems will probably pick up at least a little bit. History shows that when central banks inject a lot of money into the banking system, which has been the case not only from the Federal Reserve, but from other major central banks of the world, that you do have inflationary pressures crop up. So you can't rule out that inflation can creep into the picture here in the coming months or a little bit longer, and that would augur in a bullish fashion for the raw commodity sector. One other thing, Daniela, the stock market rally that has seen the U.S. stock indexes hit record highs this week, or multi-year highs in the case of the NASDAQ, that suggests that money is really flowing heavily into the stock indexes. These are very mature bull market runs in the U.S. stock indexes, as well as some of the other major stock indexes around the world. This cannot go on forever. The raw commodity sector, including the precious metals markets, I think are laying in wait, because when that money stops flowing into the stock markets, as it will at some point, then it's going to start looking for other asset classes, and I think you're going to see the raw commodity sector fare well. This idea, this scenario has been proven historically. So once that stock market does start to top out, and my bias is that this bull market run is very long in the tooth and probably not going to see a lot more upside, then you can start to expect that asset monies will start to flow into other assets, including the raw commodities and gold and silver.
Jim, we also have the Indian festival of Diwali coming up. Would this be supportive for gold prices?
Historically, Daniela, that Indian festival is a time when you see physical demand for physical gold pick up in that time frame from Asia. So certainly it's going to be an underpinning factor for the market.
Jim, and we'll get to your market rating now in a second. You've been relatively bearish, slightly bearish on gold and silver as of late. What would it take in order for you to take on a different perspective?
Actually, Danielle, the past week or so, my Wyckoff's market rating has moved from a slightly bearish posture to a neutral posture, meaning a rating of 5. Just today, the rating for silver went to 5.5 because we hit a new 6-week high in December COMEX silver. So on a very short-term technical basis, both gold and silver markets have been trying to trend higher here recently. And if we can close prices on Friday at or near the weekly highs, that's going to augur in a further bullish sense on a near-term basis for both gold and silver. And you could see prices start to sustain an uptrend on the daily chart. Okay,
Jim, what are the support and resistance levels you're looking at for gold and silver?
For gold, we've got overhead resistance at 1375 and change. Solid technical support at 1300. For December COMEX silver, we got solid overhead resistance at 2344.5. and solid technical support at 22.
On that note, Jim, thanks for joining us right after the FOMC.
Thank you, Daniela. Bye-bye.
And thanks for watching this edition of Technically Speaking with Jim Wyckoff. You can email me at newsfeedback@kitco.com or follow me on Twitter at Daniela Cambone. Thanks for watching.